Have you missed out on filing your income tax return, or do you want to file a revised one? Welcome to TOI Wallet Talks. In this video, Parizad Sirwalla of KPMG in India tells us about the penalty, interest payout in case you have a tax liability, or any possible impact on your refund when you file a late or revised income tax return. Welcome to the show, Parizad.
Thank you, Smriti, once again for having me.
So basically, we want to understand, let's say I have missed out on filing my income tax return before the 31st July deadline. Okay. Now, what do I do? Do I have a penalty to pay? One. Two, when I file the return, let's say there is a tax liability that gets thrown up, right? So what do I do in that case? Is there an additional penalty or an interest payout to that tax liability because I'm filing a return which is late? And third, for a refund, does it impact my refund at all?
Well, I do have a time of roughly around 5 months now, up to 31st December 2023, for filing my income tax return for the year ended March 23, in case I missed the July deadline. That is, to start with, the deadline is now 31st December 23, as we tax professionals call it, to file a belated return, to your question. But everything comes with its share of consequences, right? The first thing is there will be a fees for late filing, and that is prescribed, just to quote you a section under 234F of the Income Tax Act. And you are liable to pay a kind of a late fee of ₹5,000 if your total income has exceeded 5 lakh rupees. If you're in that category, then ₹5,000. If your income category is below 5 lakh rupees, then your late fees is only ₹1,000. But you have to pay this late fees, and then only you can file your belated return.
Right.
Second consequence is to your question, that what if I had an incremental tax liability? So besides the late fees, let's assume that you still had a tax payment due at the time of your final true-up and at the time of your return filing. So besides the late fee, there is a section 234A for interest for non-filing of timely return, which is not filing on time. So in case you have this tax liability, there is an additional interest which is calculated at 1% for every month or part thereof. So it kicks in from 1st August 23. Now let's assume you file it by 31st August, then you will have it for 1 month. But let's assume you want to still wait and do your belated return only by 31st December, then 1% is the penal interest for 5 months, which kicks in up to 31st December. And that is how it will be computed on the net tax payable. So that's the second consequence. The third type of interest that we've generally seen is basically for under 234B, which is interest for non-payment or inadequate payment of advance tax. So you know that as an individual, you're supposed to estimate your income and pay advance taxes, in 4 quarters. And let's assume your net tax liability is more than 10,000, which is your gross liability minus all your TDS and other reliefs. And even if you file your return on time by 31st July, but say you have not appropriately paid your advance taxes by 31st March 23, and it is less than 90%, the tax that you paid is less than 90% of your assessed tax, then you still have to pay this interest under 234B, which is again 1% for every month, okay? And that's basically for shortfall in payment of advance tax, okay? So that also kicks in, even if you had filed by 31st July, assuming you've not paid sufficient advance tax, to put it simplistically. So again, if you have a situation like this and you're further delaying your return, let's say up to 31st December, then it's again 1% per month, right up to the time you pay your taxes and file your return.
Right.
The other consequences, if in your return you have carry forward of losses. So for instance, it's, sometimes you have losses under your head capital gains, or you could have losses under your business income and profession, or any other source of loss. You cannot carry forward those losses. You basically lose the right to carry forward the losses if you've not filed the return on time. So belated returns, you lose that right. So effectively, it's your sort of loss to not offset those losses because you've not filed the return on time, except house property loss, which you can carry forward. Just like you have an incremental tax payable, assuming you were in a situation where you had sufficiently paid taxes, but for some reason, let's say I overpaid and I had refunds due, but I have missed filing it by the deadline of 31st July, then unnecessary by filing a belated return, I'm myself delaying my own ability to get the refund back from the government. So in that sense, it's my opportunity cost of money for the refund. The other consequences that in these days where you have the new tax regime, and if it was more beneficial to me as a taxpayer, and let's assume that throughout the year I had paid advance taxes under the new tax regime, or my employer had deducted tax at source under the new tax regime, and I have not filed my return on time by 31st July, then I lose the right.
I get switched back to the old regime.
Yes, I switch back to the old regime only by virtue of me missing the deadline for the return. Last but not the least, as you know, there are penalty and prosecution provisions. Just for the sake of completeness, even if you don't file the return for whatever reason by 31st December, and if you have taxable income, then you're construed to underreporting your income.
Right.
And you might land up, paying huge penalties, which can go up to 50% to 200% of your tax liability, depending on the facts of your case. And while we don't want to get there, but there are also prosecution provisions which the regulators can impose, which are there in the income tax law, of course, in very advanced cases.
Okay, but Parizad, let's say I did file my return on time within the deadline.
Yes.
Now I realize that there has been some error at my end, whether in terms of misreporting of income, underreporting, overreporting, anything.
Correct.
So now that I want to file a revised return,
Correct.
Will a penalty be charged? 1, 2, in case there is a tax liability that gets thrown up, again, what will be the interest payment mechanism, penalty mechanism? And in case of refund, will there be any impact?
First of all, the deadline for filing a revised return for the year ended March 23 is again 31st December 23. So there are very short deadlines now for doing these things, so 31st December it remains. Now, some of the consequences are the same. So for instance, you don't have the late filing fees of that 5,000, 1,000, which we spoke about. So those will not be there. But you will have, let's assume the advance tax was not sufficiently paid by 31st March that we spoke about. The interest on the 234B at 1% per month will continue to kick in, assuming you are in that situation. Then we spoke about the delay. Suppose you were in a refund situation and you have, you were entitled to receive a refund from the government because you overpaid your taxes. Revised return will again delay the receipt of your refund, which is like your own money, getting it back. There is a slight bit of ambiguity on the wording of the law around this new tax regime if you file the revised return, on whether you can opt for the new tax regime at the revised return stage. It is not so clear, because if you have filed the old regime in the original return and you now want to opt for the new regime in the revised return, there is a little bit of ambiguity on the wordings of the law there. So that is one challenge that remains. And let's assume that, in between this time, which is pragmatically hopefully not possible, but between, let's say, March 23 to December 23, till the time you file the revised return, there is already some notice from the department and they discover some underreporting of income, then they will levy penalty. But before you file the revised return.
And Parizad, what is this concept of filing an updated tax return?
Yeah. So that's a new thing, new provision, 139.8A to be precise, basically to give a facility to people. Let's assume you missed all the deadlines, belated, revised return deadlines. And after 31st December 23, the clock is already over and you've not done anything and you want to now do something. So there is this option to file an updated return. It's a form number U, which is new, and that gives you a time limit up to 31st March 26. But you can do this updated return only under prescribed set of scenarios. It's not automatic. First of all, there has to be an incremental tax payable. Only then you can look at the updated return scenario. When you are going for the updated return, you will need to very clearly disclose the reasons as to why you're doing the updated return. Either the return was not filed previously, the income was not reported correctly, you used the wrong head of income, or whatever, there are prescribed set of conditions, you use the wrong rate of tax. What are the reasons for which you're taking recourse to an updated return? And we must know that the updated return, as I said, has a host of conditions prescribed in the law. You cannot file it if you are basically showing a loss now suddenly, or you're resulting in a refund or a nil return. You cannot increase your refund. You cannot, if there are any proceedings for assessments that are already started on you for the year, let's say summons have been issued, notices have been issued, search and surveys have been conducted, as an example, you cannot have recourse to this option of updated return. You have additional tax payable for filing this updated return. Let's assuming you cross all these conditions and fulfill that you're eligible to file an updated return. You will have to pay 25% of the incremental tax and interest payable when you file the updated return. And again, if you file the return between 31st December 23 before March 25, then it's 25%. Otherwise, it's 50% of the incremental tax and interest liability, just to give an idea of the financial quantums and cost involved.
Right.
If you file after April 25. Over and above that, your other consequences that we spoke about, the interest under 234A for incremental tax liability, or the late filing fees that we spoke about, all those remain. These are additional financial implications for an updated return. But of course, the benefits that the government seeks to provide is that at least you will avoid, the penal consequences for underreporting of income, and you get relief from any potential prosecution proceedings, and reduce the opportunity for high-end litigation by going through this route.
Okay, and Parizad, finally, let's say I filed my income tax return, but I have not e-verified it yet.
Yeah.
So what is the timeline within which I can e-verify my return? Is there a penalty for late e-verification?
So you can actually, the timeline for e-verification is within 30 days of filing the tax return. There are two ways you can do it. You can either send the physical form, which is ITR-V, to the Central Processing Center, which is in Bangalore, or you can e-verify it online through the portal. And there are various options through Aadhaar, OTP, through your net banking facilities, but you need to do it. If you have not complied with that deadline, then your return is actually treated as not filed, and it will attract all these consequences. And very often people do miss this e-verification, this last step, because they just don't know about it perhaps. So if you don't do it, your return is as good as not filed, and all these consequences will follow. You may try and request for condonation of delay if you breach this 30 days deadline by giving an appropriate valid reason, but it's at the discretion of the regulator then. So please do it within the prescribed timeline of 30 days of filing your return.